Inflation is up and it is continuing to rise, yet gold and silver are down and are continuing to fall. This is the exact opposite of what many analysts, including those on social media and this platform, have been telling you, including myself. So what is the best argument in this kind of environment for stacking precious metals? I'll tell you as we explore. This is a very important topic because a lot of the data is not just suggesting, but it is screaming that gold and silver are not a hedge against inflation. At least they aren't right now. So what gives? How do we buck that trend? How do we make the argument? How do we make the case, not only to others, but to ourselves, that what we are doing is the right thing? Well, I'm going to give you the very best argument in this kind of environment because it really is just a matter of fundamental economics. And that is what is putting pressure on gold and silver. Well, right now, we are living in a relatively unusual time. I say that because usually history repeats, may not often repeat, but it does rhyme. And the biggest pull against these is this. But we stack these, gold and silver, and to some extent platinum and maybe palladium, because of the inflation, which means this thing is losing value. So why is gold and silver down amidst rising inflation? Well, it's because of what the market perceives is going to happen in the future, which I think that is part of the reason why we have futures price and we have spot price and the like, because of what they are predicting is going to happen down the road. Now, we have seen some pretty wild movements in the markets, not only in terms of the precious metals, but other stocks as well. But there are certain stocks out there that move up and down in price, and they are considered investments. I don't like to look at gold and silver as investments. However, you can look at them in some way like stocks, in so much that they trade like stocks in paper form or in electronic form in reality. You're not trading little slips of paper back and forth for gold and silver. But that's what they call it because it's really, that's backed by nothing, just as the dollar is not backed by anything. Yes, they may pay lip service that they have some silver in some vault somewhere, but the amount of derivatives far exceeds the amount of silver that is backed by it. There's very few actual exchange-traded funds that are backed by physical at a one-to-one scale. So a lot of people invest in silver, and that's really what it boils down to, with no physical delivery, very little premiums to make the trade in silver or gold, and they reward themselves when the price goes up. Then they sell or move to cash, and that's exactly what happened when the pandemic sent shockwaves across the markets, and we saw silver drop below $12 an ounce. And gold dropped fairly significantly as well. But what did stackers do then in the midst of that economic turmoil? Well, they bought silver. They bought silver. Even with premiums as high as they were, they made a buy in the physical form. But that's just it. There's two different ways to buy precious metals. Number one is the physical, such as you see here. And that kind of market, in a sense, is independent of the paper markets and the electronic markets of silver and gold. And so that is the best way, I believe, to hedge yourself, is to buy it in the physical form. Because premiums will vary, and what you can get for your silver and gold when you go to sell will vary depending on the kind of market it is in. In this market that it stands right now, well, premiums are down too because less and less people are buying precious metals. And I believe it's for two reasons. Number one, inflation is high, which means their purchasing power is decreasing when they use these or practically any other currency out there. They're all being inflated at some level. And so with that being said, people have less money to buy gold and silver, less fiat dollars or other currencies to buy. The other thing is some may be disillusioned because of what I said at the very beginning of this video, that gold and silver are down and inflation is up. But that's just it. The best argument to make in this present environment is to hold on or to buy as you can afford within your budget, because this too shall pass. That's right. It's as simple as that. That's the best argument. Understanding that sooner or later things are going to come around, and it probably will happen sooner than you think. In other words, gold and silver indeed are hedges against inflation. And by the way, they are also hedges against deflation. I did a video about that very topic recently. It's just is a matter of time. It's not always in lockstep. And that's the thing that a lot of stackers out there don't fully comprehend or grasp. And it has been the case where gold and silver have fallen in light of rising interest rates and in light of inflation rising. And that is something that's been happening for a while. But over the course, if you watch the markets over the past months, year, or 2 years, you have seen that gold and silver have really, for all intents and purposes, held their own in spite of increased rate hikes, and increased of monetary tightening. We have seen gold and silver maintain independently of each other to some aspect. Silver less so because it's more of an industrial metal. It is seen more as a commodity by the markets than gold, whereas gold has held its own much better in terms of its nominal price because of the other factors, and the fact that central banks have been hoarding a whole lot of it over the past year and a half. And so that is having a great impact. We've seen the demand for gold in that regard because they see the writing on the wall. Central banks see the writing on the wall. In reality, a lot of folks out there in nations like Turkey have seen that writing time and time again, and they accumulate when they see a currency crisis. Because it all boils down to how much faith do you have in your currency. And right now, the entire world has a lot of faith in this. And the strength of this compared to other currencies is very high. In fact, it's really, for all intents and purposes, it's unusually high. And to that extent, it is the most powerful currency in the world, even amidst de-dollarization, which is something that's been talked about a lot in this community, and in other markets as well, and other analysts have been discussing it. But that is the key, folks. Is the strength of the dollar is holding gold and silver down. But that too shall pass. That's right. The dollar will weaken compared to other currencies in due course, and a lot of that will probably occur once we start to see the Federal Reserve actually begin a pause. And I think that's probably what it's going to take, is an actual pause, and then leading to a cut at some point in time. And I believe that could come probably next year. I'll speak more about that in a later video. But then we will start to see gold and silver really react and prove themselves as a hedge against economic uncertainty and against inflation. We are in economic uncertain times right now. We don't really know how bad it's going to get. Or how severe the next recession will be if we're not already in one at this point in time. But that is the perspective. Now, the other thing to think about in terms of looking at the best argument for gold and silver is understanding the timing of the markets. This too shall pass. That's your strongest argument for stacking precious metals. Being patient through these times, but also understanding the timing on when you got into stacking precious metals. Because if you got in last week and you're starting to see gold and silver down with high inflation numbers have just been released and they are up higher than they expected. and you see gold and silver going down, you're coming in as a newbie in the world of precious metals. Immediately, you're seeing the exact opposite of what you may have been told on this platform and in other areas. But I like to provide a more realistic viewpoint and understanding of where precious metals are and how they react to the markets. If you go back and look at a chart and you overlay recessions along with the price of gold and silver, typically gold and silver go down during recessions. And we've not seen an inflationary environment like this in the last 40 years. And so with that being said, you could probably do the same thing, because when the Federal Reserve raises rates, that does put pressure, and we have not seen that kind of environment since the last time, and there's not been a lot of analysis such as you see nowadays, minute by minute essentially, of how things react. And because of that, the psychology of the markets and how they react to news and surveys and situations and market activity, and what one trader is going to do compared to another one, they talk amongst themselves, a lot of them through instant messaging and what have you. Well, it can happen very quickly. And never underestimate as well, too, that kind of environment leads to potentially a manipulative force within the markets, maybe not by on purpose, but everybody kind of comes in together, sort of a mob kind of situation. They react collectively on certain things where you have high-frequency trades and the like. And then you also have other factors that can come into play, too, that can push these things down and up. One way or the other, in order to profit or what have you. And then there's outright manipulation, criminal manipulation that we've seen that J.P. Morgan has been caught doing. So the overall answer here is this is going to be a temporary situation. One thing that will be transitory, and that is low gold and silver prices. We know that for sure. They're going to come around. And by the way, low is relative compared to where they were, just a month or so ago. That's the other factor too. But if you look at it over the course of history, even recent history, gold and silver are not doing too bad. It just depends on your perspective. So you have to take a look at the history of gold and silver prices as well to get that understanding. And again, we are now in the midst of a late summer slump, something that I had predicted about a week or so ago, and we're in the midst of it. And I think it's probably going to continue at some level for a while with some support for both metals. But in the meantime, the best thing I think to do is to hold on to your metals through this. And if you can afford to take advantage of the dips, you should do it. But I would never encourage you to buy outside of your means, outside of your budget. That defeats the purpose, because you're contributing to the cabal, essentially to the system, when you have to pay interest. So if you do put anything on a credit card, make sure that you pay it off within 30 days, and to make sure you get a good deal and not have to worry about paying that 4% unless you can get some sort of advantage back, or you get credit card price the same as cash price. So there you have it. Let me know what your thoughts are about that one thing in order to stack precious metals, the best argument, and that is to understand that this too shall pass. Hope you found this video informative and insightful. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.